Maybe we continue to invert on the curve. So that's all we talk about. Guy's been bringing it up. And if you look at the dichotomy between the short end and the long end, it's plain as day. And if you look at terminal Fed funds, so we're out in July is really where we expect the Fed to kind of peak at Fed funds. But the 10-year is getting a head start. I would say maybe, and I know you asked the questions around here, but maybe the question I would ask is, what is a weak payroll number? What does bad do? Because there's a payroll number on Friday. And look, people are pointing at this Powell meeting tomorrow, and his speech is going to be the last real Fed public statement we get before that DEC meeting. But the data before that DEC meeting is really important. This payroll number is really important. The job market's basically within a couple ticks of 50-year tightness. And I think, I look at the markets overall, and I look at where we are with the VIX at 22, and I look at what the markets have fallen to the 200. I think the market's going to imply Powell is bullish. I think the markets have already made up their minds.
Yeah, I'd just say this. I think he's got to look at that Friday number. I think he knows what he is when he's speaking.
You and your conspiracy
no, I just think he does.
The Fed has a sneak peek at whatever's coming out.
Why wouldn't he? I mean, when you think about it, this is probably pretty important, especially when you think of the string of kind of data that we're going to have into that DEC meeting. We're going to have CPI, PPI. When you think about how explosive the market's reaction, specifically, well, both stocks and in yields after that CPI number, I think he's got to look at it. I also think because a lot of these seasonal things, I think the likelihood that we see unemployment tick up in any way, shape, or form is probably not great. So I think you're going to look at this number and you're going to say it's still.
But is that good news?
No. Well, I think it's going to say it's good news for the economy. It's good news
for the markets.
For people with their jobs. I don't know if it's great for the markets. You know what I mean? So to me, I think he's got to look at it. I think he probably stays the course. I don't think he surprises tomorrow.
Yeah, Grasso.
Yeah, he's got to stay the course. He's got to stay extremely hawkish. That's what the market has been telling us the last couple of days. They've been selling off ahead of it. But the market does this rinse and repeat. They sell off ahead of whenever he speaks, and then it rallies afterward. We still have CPI to look forward to. That could be a dovish number. But having said that, if you look at the market, you asked what the 10-year does. The 10-year yield probably comes in. The 2-year yield trades up higher, and you have a more inverted yield curve. But I'm still banking on that year-end rally for people marking their books up.
Yeah, Santoli was having his last final word on the overtime just moments ago and said that Powell probably will likely have to address this very steep inversion. You think yes?
First question.
Why would he deviate from what he has said before? And that is that there is a path towards a soft landing.
Yeah, because if I'm a who's ever in that room at this press conference that's allowed to ask questions, if I were be so fortunate, the first question I ask is, respectfully, Chair Powell, we're seeing a 210 inversion to the tune of 80 basis points we haven't seen since 1981. What do you think that is telling you? What is that telling the markets? And see how he answers. Then he has to answer the question.